What is up, my Forex for Beginners family? Okay, so today we're going to be talking about another amazing topic, and it's time frames and how to use them. I'm not going to make this too long of a chapter, but this is very important, so I want you to, after watching this, I want you to watch it again and duplicate it on your charts. I want you to practice every one of these skills, each lesson, master it before you move on. Always remember that. Okay, so back to time frames here. So what I want you to do is, if you haven't done this yet, here, see this little, I'm over here on the left here. If you click here, see these little, they look like eyes, like a little eyeball. You can hide things that you have on your chart. So if you have like the EMA 50 or whatever you have on your chart right now, all you should have on your charts are the EMA 8, the EMA 18, the EMA 50, and I'm going to add another EMA for you guys, the EMA 200. So this is all you should have on your charts, but get in the habit of removing them because we want to keep our charts nice and clean. So right here, to always keep the EMA 8 and 18 on, but we're going to toggle on and off the EMA 200. So right here, I'm going to hit this little eye to hide it. See how it disappeared? And the EMA 50, hide it there. If you, maybe we want to do this right now, just add the EMA 200. So if you go to indicators and type in moving, and then you'll see moving average exponential. You want to click on that, and then it'll bring it up here. You can just close it and bring it up here, and then hit the gears. And I want you to make it purple. Try to copy the colors I use, so it's easy for me to edit your charts. Make it purple, and then go to inputs and put in EMA 50. Make sure it says EMA up here, and then just hit OK. Actually, go to styles too. Go to style and make sure you select this third one because we want a nice thick line. And then you can click there and hit OK, and it'll add this blue or purple EMA 50. So I'm just gonna close this because I already have it. So here, so you EMA 50 and EMA 200. Just to recap again, sorry, this should be EMA 200. So add the EMA 200 purple to your chart. We also want to have the EMA 50, which is orange, and EMA 50, and then the EMA 18 here, and the EMA 8. So we want these EMAs only, and what I want you to do is always have the EMA 8 and 18 showing. The 200, we're going to toggle that off. See how the purple line just disappeared? And then the EMA 50, we're just going to turn off right now as well. So why I wanted you guys to add all those EMAs is because I'm going to show you how I use all the different time frames and what I like to call top-down analysis. The higher time frame is the most accurate data. So I want you to just remember that. So the monthly, weekly, daily, those charts, those levels, those areas are most important, and we're going to examine that right now. Give me a minute here. I'm going to get a drink of water. Okay. Okay, so make sure all you see on your charts right now is these two EMAs, the 8 and 18. And I've removed majority for this lesson. I've removed majority of the weeklies and monthly levels that support and resistance. Like this is a monthly support or resistance, and this is another monthly support and resistance. So I just put two of them on there, and we already know how to find monthly support and resistance. So we're on the monthly right here. We're on the monthly, and I switched to, where's the line chart? Right here. So I switched from candlesticks to line chart, and that's how we, look. See a touch from the bottom. See how that's touching? Is coming up. Actually, let me show you coming from the bottom. See how it's coming up and it touches from the bottom? I'm just quickly reviewing how to find, and right here, see how it touches from the top? Okay, well, now we know that's a valid monthly line. So we're not going to review how to find support and resistance. I'm just showing you how I found these levels. And then we switch back to candlesticks. Okay, so here, so we're on the monthly chart. And what we want to look on the monthly chart is we want to look at the EMAs. See how the EMA 18 is crossed and the blue is headed down and the red is on top? That means we're in a downtrend. See how it's staying below as long as it's below the blue and red line, see the price is kind of hovering below the line. As long as the red line is above, that means we're in a downtrend. See, when it crossed up here, we started our downtrend. So I want you to notice this. And because we're on the monthly chart, the monthly chart, because it's the higher time frame and there's more data behind each one of these candles. Like, we want to look at these candles. Like, this is 1 month of data. This is not 15 minutes. 15 minutes chime chart is really 15 and 30 minute. Those are like really has a lot of random data in it. So that's why when we're looking at the higher time frame, right now we're looking at the monthly, each one of these candles is showing you it took 1 month for it to travel, and this is actually quite a bit. We're just looking in the monthly time frame, so the candle doesn't look that large, but this is 1 month of data. So when we look at the monthly chart, we're not really trading off these charts, but what we want to examine, because the higher time frame data is the most important, I just want you to examine. We're on the monthly chart right now. See right here, we had a double top at a monthly resistance line. Well, that would have definitely been an area of interest where you should have been looking to sell, possibly because it's formed a double top and then the EMAs crossed. This was a second. So you have two pieces of information here. Double top, monthly resistance, and then the EMAs crossed and a downtrend continued. So when you're looking at this and you're seeing this on the monthly chart, because it's the higher time frame, it's the monthly chart, it's telling you that we're most likely going to travel in this direction possibly for a long time. Because when see how price here, it was the blue was it was above the blue, so we were trending upwards. And then because we're on the monthly chart, when the monthly chart shows, because there's long-term data, if it shows a change in direction, like with the EMAs crossing here, and see how the EMAs, they stay separated, this is indication that all you do is look for sells. You look for sells during this period while the EMAs are rolling downwards. See how the red is, between the separation between the red and the blue is large. It's trending down quickly. So all you do is then, mark up your charts and move down to the lower time frame and look for sell opportunities. So basically, let me recap here. On the monthly chart, all we want to look at is, hey, what is the EMA showing us here? The EMA 8 and 18 is showing us that the red is on top and we are trending down. We're trending down. That's all you want to get from the monthly chart. We're trending down. We're aware of this resistance level. There may be other levels, monthly, weekly, and monthly levels here, but I removed them right now for this video. So this video is more clear. I'm going to show you clarity how to use the different time frames. So right now, just so you know, all of my support and resistance lines are not shown. But just for this monthly chart, we look at the EMAs. We say, yes, we're in a downtrend. we should keep looking for sell opportunities because the monthly is in a downtrend. So take that away. Just keep that in your mind. That's what we look for in the monthly. We also want to look at the last candle in the monthly. So this is telling us, yes, we're in a downtrend. The EMAs are showing us, but we just printed a candle here, a bullish engulfing. So again, on the monthly chart, we look at the EMAs crossing, or is showing us that we're in a downtrend here. We've been in a downtrend for a long time, and we want to look at the last candle or last 3 candles. What is this telling us? You know, we were going down, 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 then we printed this little spinning top, and now we printed a bullish engulfing. So you want to make note that, hey, okay, a bullish engulfing, the EMAs are showing us we're in a downtrend, but maybe the trend is about to change. I would be watching to see if price continues to rise. So that's what we take away from the monthly chart, okay? And then here, I want you to always be aware of, we're gonna add right now the EMA 200. I'm over here on the left, and then we're gonna add the EMA 50. So the other thing I want you to know is, when you're just like support and resistance, the monthly support is way stronger than 30 or a daily support and resistance. So we know that a monthly support and resistance line is obviously way stronger than a daily support and resistance, because the monthly charts have more data and those levels have held for a longer period of time. So keep that in mind. And then I want you to look at here how the EMAs, see how when price started to fall, when these EMA crossed, it fell below the EMA 50, and then it came back up and tested this monthly level, and then it continued down. See how and then it popped back up here. When we're on the monthly chart here, if I saw that now price is approaching this EMA 50 and the EMA 200, and then it formed a double top, and we got a bearish engulfing and the EMA cross, like there's tons of reasons. There's tons of reasons why we should have been looking for many sell opportunities. This is just telling us confirmation that the trend is changing and we should start looking for sells. And another note on the EMA 200, this is the EMA 50, the orange, and the EMA 200. All they are is, I want you to think of these lines, these exponential moving averages, or EMAs as I call them for short. Think of them as moving support and resistance. This right here, this is monthly support, and it's a fixed position, right? Give or take, you know, price floats are a little bit around it, but this is a fixed position support and resistance. Exponential moving averages, they're like, see how it's moving? It's moving support and resistance. I want you to think of it like that, moving support and resistance. So here, why I want you to toggle the EMA 50 and 200 on and off, because whenever you see price approaching this level, know that it's going to act like resistance. So there was like 3 levels of resistance right here. You had the monthly resistance, you had the EMA 200 and the EMA 50, and then the EMAs 8 and 18 crossed and we fell rapidly. That's how you use the monthly time frame. And essentially you do the same thing on every time frame, but the higher time frame is always the best. But look, it takes months for price to reach this level, but you need to still be aware when we approach this level, the opportunities are even greater potential to make money. So just know these levels. But the thing is, the monthly, these levels take a long time to reach this level, so we don't trade off these levels. We trade the lower time frame, but not too low. I like to be around the 4 to 8 hour time frame where I do my my chart analysis. But right now, this is what we should take away from the monthly time frame. you know, so maybe you could make a note, or you could draw a line here and put a note saying monthly EMA 50 and 200. So if you put a note here, when you go down to the, say the daily time frame, let me scroll back and try to find that. 1 second. Hold on, I might have. Let's go to the monthly. See, make sure sometimes when you draw things on the monthly, hold on, if I go to visibility, yeah, so it's not on the daily. So let me select the daily so it'll show up on my daily chart. Hit OK, and then I'm going to pop back to my daily chart. Right there it is. So if you mark up, you see on the monthly that the EMA 50 and 15 are floating around this level, just mark it, because we're not going to trade off the lower time frame. Knowing that data, and say you're for trading off the daily chart, knowing that, hey, we're approaching a monthly EMA 8 and 18, there's lots of resistance here. See how noting what I did on the monthly chart, how it helps me on the lower time frame? That's what I want you to do. So I'm going to jump back to the monthly now. And then I'm going to right click on my chart and hit reset, and it kind of brings it back to here. So, and I also want you to note when you change time frames, see how the EMA, the purple here, the EMA 200, watch when I switch to a lower time frame. So let's say like the daily. 1 second. See how on the monthly, the EMA, purple EMA 200 was up here, but now it's down here. So that's what I mean. Don't think that when you switch to a different chart that these EMAs are going to stay in the same position. They don't. On this time frame, the EMA 200 is down here. So just keep that in mind, that that when you change time frames, the EMAs move around as well. That's why you should make a note up here, how we made a note that they, on the monthly time frame, we were approaching a EMA 50 and 200. So just make notes on your chart like that. Okay, so let me delete this now. So I hope you understood that part. So just be aware, we're still on the monthly, and we've got so much data already off the monthly that this would have been an excellent selling area because of those reasons. So just be aware of that in case price ever approaches this level again. So right now, maybe we'll come back up, and maybe we'll probably, if we climb above this red EMA right here and they cross, our next target would be the EMA 50 orange right here, because it'll be floating around here. You see how that's how you use the EMAs. And so now that's all we're going to take a look at on the monthly time frame. So go back here and just like toggle these off. So the EMA 200 and the EMA 50, just toggle those off for now, just to keep our chart nice and clean. So now we're going to go to let's go to the weekly. Let's go see what we see at the weekly. So again, on the weekly, I want you to, again, make note that the EMA 8 and 18, it crossed here. See how they're separated? See how they're separated? And see how price pops up and finds resistance on this red EMA? Again, it popped up by the blue, spiked up to the red, and continued. See how there's good separation between the red and the blue EMA? That means we're trending nicely downwards. Here, we got price jumping up. There was some sort of battle here. But look, the EMAs did not cross. That's telling us that on the weekly chart, we're still in a downtrend. But take a look at this. On the weekly chart, are we about to cross? And now I want you to examine the weekly chart because there's a whole lot of good data here too. So let's check this out. I'm excited for you. Okay, so one thing I want to point out is, look at this long wick right here. Look at this long wick. Oftentimes, look, we're in a big downtrend. From here, we're trending down. The EMAs are crossed and we're trending. There's good separation. And then we spiked all the way down here. Well, a lot of times when we get a spike, price usually recovers and then continues down to the same level as before. And let me draw a line. So this is what you should also do. Come to the weekly chart and just make a note. What do you see? Well, right here I see this spike. Let me make the line straight. Well, look at that. Is that a coincidence? No. It's because millions of traders just like you are looking at the same charts the same way, and they're saying, hey, price is approaching this level that we spiked to. Look how it tried to go below it and it just couldn't. Look at this. It tried to close below it, only spikes. If you guys noticed this on the weekly, you should have made a note of it. And then we got a bullish engulfing. It came back, retested the same level, got another right here, a bullish engulfing, and we went up. This should have been an easy buy opportunity right here. This bullish engulfing candle right there. Obvious buy opportunity based on the weekly chart. So what you would do, you could just, make a notation here. Right here. Weekly spike level. Just whatever you want to name it. I just want you to be aware of what's happening. So if you would have labeled it like this, or you could even put, it's better if you actually use, I'm up here, if you use this horizontal line, because then you can actually double click it and put a label here. You can label it whatever you want. See how it's making a label? It's actually a better tool to use. So you could have used that tool to label this level. So you would have just labeled this spike, and because you were aware from the weekly chart, you could have been working on I like the 4-hour time frame. Let's jump back to where I had that right here. So look at this. Working off the 4-hour time frame, you would have known that, okay, we spiked down here before. We're going to be looking for possible continuation. It could have continued down, but once we saw it pop up and then come back up here, and it found support here and started going up, we should have been buying around here. We should have been buying. And if we could have based it off the higher time frame, whatever. But as long as we're on the weekly, as long as we're aware of all these levels, that's how we drop into the lower time frame to look for opportunities, right? So based on the weekly time frame, we knew that this was some important level that it spiked down to, and I would have been watching to see what price did around this level. And what we're looking to possibly do is, if the EMA 8 and 18 we're on the weekly chart right now, if it crosses here, we potentially might start seeing a uptrend. So we're at a very important level here, and I keep telling you guys to study this one pair, study AUD USD. If you can master this pair, you'll be able to print money. If you jump around between different Forex pairs, you're not going to get to know the pair. Every pair moves different. You have to analyze every time frame, and it's like a brand new, it's like you're learning a different trade. You want to master one trade. You don't want to be a jack, what they call a jack of all trades, people that know, how to do various things okay. You don't want to be that guy. You want to be the guy who masters one pair and prints money off it. You know, once you go through my training and you understand how to analyze the charts and how to map one pair, then yeah, sure, you can go and map other Forex pairs or commodities or whatever you want to trade. But right now, as a beginner, I want you to focus on this pair and just map it. Just understand what's going on. Okay, so now, you know, we're paying attention to, on the weekly chart, that we just formed a, you know, two bullish engulfing candles, and maybe we're gonna cross right here. We haven't crossed since here. We've been, and this was, see right here, this is March 2018. We've been in a downtrend since February, March 2018, you know, and we're approaching 2020. So almost a year and a half, 2 years, we've been in a downtrend. And this right here, this crossing of the EMA 8 and 18, that'll be on the weekly chart. That's significant. So pay attention to these higher time frame details. Just make note. If this ended up crossing, I would just make a notation here. EMA 8 and 18 crossed on the weekly chart. You even draw a level where it crossed. You could, you know, hold on. Say it crossed right here. Say, oh, sorry, 1 second. Wrong tool. Say if it crosses about here, just make a note of it and say, you know, say EMA 8 and 18 crossed on the weekly chart. So why I want you to make a note of it, because maybe price will, you know, say it breaks through, maybe price will come back, retest this level, and it'll fly upwards, you know. So I want you to be aware of all these levels, and it could be, you know, it could be support and resistance, it could be EMA 8 and 18, or it could be the EMA 200 or 50. Like, it just be aware of everything and make a note of it on your chart, especially the higher time frame. So right now, all we can see from the weekly time frame is we crossed up here, we're trending very rapidly down, and now we've reached a significant low. We actually just made a lower low. See how this was, you know, this was a high, this was a lower low, a lower high, a lower low, a lower high, lower low, lower high, and then we made a lower low. We made a lower low. So this is another significant information that you want to know, you know, because always be thinking market structure. Market structure. Well, we just made a, you know, you can lower low. We had a lower low here. Copy, paste. Now we made another lower low. So that's telling you something. But be aware that, you know, maybe we're going to retrace for a little bit. Maybe we're going to come back up to here. That's when, you know, again, you could use Fibonacci retracement. You know, like I said, the higher time frame, if you're doing Fibonacci retracement on the weekly time frame, that level is going to be so much more stronger than a Fibonacci retracement on a, you know, 1 hour time frame. So just keep that in mind. I want to drill this into your head that the higher time frame, whether it's the EMAs or the Fibonacci retracement or the support and resistance, the higher time frame is so much stronger. It'll hold so much stronger than a 1 hour time frame. That's why I say if you trade too low of a time frame, you're going to get caught up in random short-term movements, and that's how you get spooked out of the market. So that's why we want to base our trades on higher time frame data. So just remember that. So, you know, look, you know, you could run fibs on your, we're on the weekly time frame, and maybe we'll come up to 61.8, or, you know, my sweet spot right about here, and travel back down. Maybe we'll crash lower because we're actually, you know, we're on the weekly time frame. We haven't, the Australian dollar versus, you know, hasn't been this low in a long time. So there's different economic factors at play, but we don't care about that stuff. We just care about, you know, joining the trend. That's all we want to do, is join the trend and notice what's going on. We don't try to predict which way it's going to go. We just want to let it go and join the trend, right? Because the big players are pushing the market. We're just joining the trend. So right now, just notice that we've made a lower low, but we formed a double bottom, and the EMA 8 and 18 may cross. That's all I can really get from the weekly. Let's quickly check the EMA 250. You know, this will be our next, the EMA 50 here, this will be our next resistance area. Maybe we'll spike up to here, you know, and drop back down, you know. That is our next resistance area, because look here, we spiked up to the EMA 50 right there. You know, we didn't really spike up there, but that was our next level of resistance. And same thing here. Look, we spiked up to the EMA 50. So just make note of these, because, you know, I'll be looking to see if we can get above this EMA 50 right here. So this is what I mean. You can just make a little line like this. You can even color it. You can, sometimes I do this, I just color it orange, and that represents the EMA 50, and you can, you know, maybe make a notation, weekly EMA 50. You know, this will be the next target, because we see that it's played a resistance level in the past. So that's how we use the EMA 50. So maybe price will come up to here, and maybe it'll come up, and maybe it'll find support on it. Maybe it'll find support and then shoot up from here. That's what it could do. Or it could do what it previously did in the past. One second. It could just find resistance and shoot down. So this is what I want you to pay attention to. You can see in the past here, I'll just give you some proof. See how before it got a bearish engulfing, it fell below the EMA 50 and price dropped down. And you see how price was going down, 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 and then hit a kind of a double bottom, and then it started jumping around. See how it's kind of jumping around the EMA 50 here? When price approaches the EMA 200 or the EMA 50, it always reacts. It doesn't want to stay very long close to these. And then see, look, it shoots away from it. That's what it always does. And then it acts as resistance here. So just make notice of what is happening with the EMAs, and then just hide them away, because we want to keep our charts nice and clean. And then see how that notation stays? Well, I could drop down to the, you know, say the daily time frame now, and look, see how my notation is going to help me? This is going to be our next target. Look at this. Let's move to the daily time frame now. So, you know, pretend that my you know, I don't have all my support and resistance drawn in, but we could have some support and resistance, you know, drawn in here. And now I also have a notation here, weekly EMA 50. Well, that's weekly is significant level, so I'm going to be watching to see if it you know, what happens around this level, you know. And then on the daily, I also noticed, I'm gonna, you know, you don't have to follow all of these EMAs, but I'm just gonna show you what I notice, right? So depending on your account, I'm gonna add the, you know, let's see what the EMA 200 is showing us. Okay, yeah, EMA 200, and let's see the EMA 50. So let's leave the EMA 50 out right for now. Let's look at the EMA 150, and you don't have to add the 150. 200 is fine enough, but just look at this for a second. The EMA 150. Look what price has done for a long time. You know, look, it fell below it, found resistance here, and then dropped below it. Found resistance, 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 drop below it. Found resistance, drop below it. Now I'm sounding like a broken record, but we're approaching this level again, right? So either we're going to drop below it, or maybe we'll find support on the weekly EMA 50, and maybe there's some support and resistance levels here that aren't marked again, I told you, but you can see, maybe, you know, there's going to be some sort of decision-making point here. Either we're going to drop down, continue going down, or we're going to find some sort of support here, and that's when we start looking for buys. Or if it fails from here, we start looking for sells. That's what you do. Okay, so again, I'm going to remove the EMA. I'm going to remove the EMA 150. Actually, let me just remove all of these for now, just to keep it nice and clean. Okay, so let's examine. So now we're on the daily chart. So we're working our way down. We're working our way down. We were on the monthly, then we're on the weekly, and now we're on the daily. So let's examine the daily. So also on every time chart or time frame, you always want to look at the last candle. But now we're slowly going to the lower time frame. We'll start looking at more than one candle, but you can see here on the daily, you know, look at this level here we marked, you know, look at it. It's finding support. It tried to break below it, then got hammered up, came back down, and then right here, when the EMA and 18 crossed and we got a bullish engulfing on the daily, this one daily candle combined with the EMAs crossing, combined with, you know, this resistance level that or support level that we previously found, like all of this was evidence for looking for a buy. And see how there's separation between the EMA 8 and 18, and see that we're actually finding support. We're finding support on the blue EMA. When price breaks out and it starts finding support on the top blue EMA, that's telling you we are trending fast. And just make a note of that, let me run some fibs, right? Let me blow your mind with some fibs. Right here. So say if we're still examining this part, let's just run fibs on various places. Fibonacci, short for fibs, Fibonacci. So let's run fibs from here to say we found support. You can play around with it. When you're drawing your Fibonacci, you can go from the top of the body to the body. So this is where it found support. So you can go from here, from the body of the candle to, the average support level or body, or you could go to the wick. This is where the wick is. Just try both of them. In this example, if I went down to the wick, see that it doesn't fall into my major levels. The 50% I have kind of almost, you can't see it because it's not a major level. But if I move this around a little bit, and this is a significant level because it found support here, and clearly it's finding support here. So on this time I ran fibs from here down to here, and just play around with it and see what you see. And in this example, look, price came down, found resistance at 38.2%, got hammered back down, and now EMAs crossed and we're surpassing. So this could have been also, this is 100% retrace. When it moves from one point and comes right back, That's 100% retrace. So it's actually broken structure here. So let me just run fibs here. So if I go from, let's go from wick to wick. So actually the downtrend started there. Actually, I'm going to go from the highest wick to the lowest wick. So you can see that it came down and it's retraced 100%. So we've broken structure on the daily time frame. So you can make a note of that. You know, on the daily time frame, we have broken structure. Let me change this color. So you can make a note that with another notation, you can go daily break a structure, because a break a structure on a daily time frame means a whole lot more than a break a structure on a 15 or 30-minute chart. That's why, again, why we don't trade based on the lower time frames. We base our trades on the higher time frames. A daily break of structure is significant compared to a lower time frame break of structure, or a 4-hour break of structure is more significant or stronger than a break of structure in 30-minute time frame. So again, on the daily chart, we've marked a break of structure. We've marked that it made, you know, it held support at this level here. We can make a note that the EMA 8 and 18 have crossed on the daily, and we've formed a bullish engulfing on the daily chart. So this data on the daily chart means a whole lot more than the lower time frame. So you can look at all these different time frames. So the daily chart, I want you to start looking at. I know I've been telling you to look at the 4-hour time frame, but I want you to take in, you know, mark up what you see on the monthly and weekly, but analyze the daily, and then base your trades, entering your trades off the 4-hour. So the daily chart, just make a note that, you know, look how we found support here, and the daily candle, we got a bullish engulfing and the EMA 18 cross, and then let's run fibs here. And again, fibs on a daily is more significant than a lower time frame. So let's go from here to maybe the tip of it right there. Hold on. Let's try wick to wick. So play around with it. Either see how here I'm going from wick to wick and seeing how it fits, or you could go see how here I went to the body, and then we can go from here, try the body, see how it looks. And it looks, you know, it looks, and I'm looking at the retrace. See how it kind of tried to get past 38.2 and then got hammered up. So you could have joined the trend. You could have joined the trend based on this bullish. So it got shot up with the bullish engulfing, and then it retraced. And see how this candle right here, this is what you call bullish. It bullish engulfed this candle. You could have bought here, put a stop loss here, and you know, and join the trend. Like so there's so many ways to join the trend, but you could have just marked. What I would have done is I wouldn't have based a trade off the daily, because I like basing trades off the 4-hour for this pair. I would have just marked a level right here. I would have now I delete this fibs, and I could have just put a notation right here. I would have put daily 38.2%. Where's the percent sign? And now when I drop to the 4-hour time frame, 1 second. So let's just drop to the 4-hour. And sometimes if I drop to the 4-hour, if you don't see, again, make sure there's visibility. Make sure whatever time frame you want it to show on, make sure this visibility is set to the right time frame. If you want it on the daily chart, make sure the daily is checked on here. So now, because I made my notation here and we're on the daily chart, I'm going to drop down to the 4-hour. And because I made my notations on the higher time frame, I know that, hey, this level is significant. So on the 4-hour time frame that I'm on now, so let's look at the 4-hour. I'm gonna see, hey, we have a level here. We just formed a bullish engulfing. This would have been you know, a possible buy opportunity right here. You could have put your stop loss right here and placed a buy based on this candle right here. You could have been bullish engulfing, EMA cross. We're at the daily 38.2 retrace, and that's it. See, that's how you just use the upper time frame data, make notations, and then this is why I love trading on the 4-hour, because you just see so much detail. And you know, I don't really want to go much lower right now for you guys than the 4-hour time frame, because look, there's, you know, so much things we can research here. Let's run fibs from here to here, you know. And yeah, 38.2, like, you know, it's 38.2 level on the 4-hour, but we already made a notation that it's the 38.2 also on the daily. So this would have been you know, a great buy opportunity based on higher time frame data and all the notes that you took on the higher time frame data. And here, let's drop down to let's turn on our EMAs first. So let's EMA 250. So this is significant. Let me jump back to the daily really quick, because I noticed this. See how it didn't really find support. It's a little too far away, but here's a better example. I know on the 8-hour time frame, is it 8-hour? Let's go to the 6-hour. So, you know, I just happened to notice this. Look how we found perfect support on the EMA 50 here, and we're on the 6-hour time frame. You don't have to use this time frame, but I'm just showing you how, if you notice all these things, it helps you realize. You could have made a notation here, right here, put a level here, and put 1 second. EMA 50 6-hour time frame. So you could have made a notation there, drop to the 4-hour, because this is where we like placing our trades, and you know, we could get rid of the EMA 200 here, and you know, leave that on the, I like leaving the EMA 50 on the 4-hour time frame. So let's examine here. So look at all the, you know, reasons we could have bought here. This was EMA 50 on the 6-hour. We found support, and the higher time frame is better data, so make notations of the higher time frame data. We were at the 38, this green line is 38.2% retrace on the daily. And then let's examine the 4-hour. We're on the 4-hour time frame right now, where we got a EMA cross. We also have a bullish engulfing off of the EMA 50. See how it found support and had a bullish engulfing off the EMA 50? There's so much evidence here to buy right here. This is how what I referred to in previous lesson is how to be an entry king or an entry queen. We want to examine the charts based on higher time frame, and we want to make notes. And so when we have these situations come up that show us that, hey, there's so much potential, there's so many reasons in our favor to buy here, that look, we would have had, you know, this could have been our stop loss right here. We would have had, it would have been an instant profit. We wouldn't have had any drawdown here. Drawdown is when, you know, if you place a buy and it continues going down a bit, that's called drawdown, and that's when you get a negative balance. And then when price starts going up, this is when you make money, your balance starts increasing. And so the goal of being an entry king or queen is so that we don't have negative balance. We want to, when we place a buy, we want price to move fast in the direction that we've placed a trade in. And that's what I'm teaching you guys. I want to teach you how to be an entry king and queen, and this is how you do it. It's based on chart analysis. It's based on higher time frame data, and then I'll quickly show you how you can use say based on the 4-hour time frame, you're like, I'm going to buy here, this is the spot. You could drop down to the 1-hour time frame, and it just gives you more detail that these are short-term price movements, so you can see that, okay, yeah, it's trending. Once you're in a buy, you can drop down to the 1-hour time frame and make sure that it continues. See how the EMA and 18 are separated? This is telling you, okay, on the short-term 1-hour time frame, we are still good. So you could, when you're in a trade, come to the 1-hour time frame and monitor the trade. As long as the EMA 8 and 18 didn't cross here, you should feel confident that, hey, we're trending nicely in the direction of my buy. And that's how you use the lower time frame. This is how you use the lower time frame. Once you're in a trade, or you're just about to enter a trade, you can use the lower time frame to make sure that we're not in retracing. You don't want any sort of retracement when you're trying to place a buy, right? So that's why the lower time frame, you want to make sure that when you're buying, that even the 1-hour time frame is in your favor. You want if you base your trades off the 4-hour time frame, but you can drop down to the 1-hour time frame to just make sure that the trend on the 1-hour is in the same direction as your current buy or your current sell. And that's how you use the lower time frame. And let me drop down to why we don't use the like the 5-minute or 15-minute time frame, because look at the 15-minute time frame. This is why we don't use you can still use it to analyze when you're in a trade, but do you see the randomness? It's going down, it's going up, it's going down, it's going up. This is why we don't base our trades off the lower time frame, because look, we'll just we'll get stopped out. We don't want to place trades based on this random movements here. We want to go to the higher time frame. We want to pull the data. We want to pull the data out of the monthly. We want to pull the data out of the weekly. We want to pull the data out of the daily. All the tools that I've taught you, all the lessons on exponential moving averages, support and resistance. What else have I taught you? Fibonacci retracement, channels. Also like on the like, I didn't talk about channels yet. I'm about to end this lesson here. I think I've told you everything I want to tell you, but look, right now we're on the daily. Make sure if you see a channel, look at that. Boom, perfect. If you see a channel on the daily, you better mark that up, because look at this channel we're traveling in. Thank God I didn't forget to tell you about this. So just like I said, the higher time frame, this channel is a daily channel. We're on the daily time frame. Look what it shows us. I base this channel on here, that point, this point. Right now, we all better be watching what's going on here, right? Something's going to happen here. We might find support off this channel and, fly up. Like, here, let me just quickly draw it for you. Like, we just found support on this resistance has now turned support. Now we're approaching this channel, and this, I believe, I forget, I actually deleted it. This is the EMA 50, I think, on the daily. So maybe we'll continue up, find support here, and we've been in a downtrend for a long time. Maybe we're due for a large retracement. Look at that. We've been in a downtrend. If you look here, January 2018, and we're approaching 2020. We've been in a downtrend for 2 years. And if anyone I just started studying this pair with you guys because I was, addicted to Bitcoin, and Bitcoin's it's for more advanced. Maybe I'll teach you guys later, but right now, this is where you can make shit ton of money. Pardon my language. You can make a lot of money here. We've been in a downtrend for 2 years. You could have just been marking up the charts and placing sells because you want to trade with the trend. You want to trade with the trend. And you could have been selling for 2 years, making bank, making tons of money. But right now, we're at a change in direction. Maybe we're going to be buying for the next 2 years. But we'll be examining it together. And I'm going to be analyzing the charts just how I'm teaching you guys. I hope you really enjoyed this lesson. I really enjoyed it. And I hope you have more clarity now on how to use the time frames. Thanks for watching.